Hey folks, want to jump on here and do a quick solo episode. This one is going to be on the business of Stripe. For those of you that have never heard of it, that is absolutely no problem. Also, I'm based in Sydney, Australia at the moment, and if you know anyone that'd like to meet up, feel free to reach out via email or social media. By the way, it's Ryan, or Ryanw, and then Conlan, Conlan at gmail.com. Let's get into the show. So Stripe's business in plain English is helping other businesses move money on the internet and taking a small cut every time they do it. Here's the breakdown. What Stripe actually sells. Stripe is payments infrastructure. Instead of company building its own system to accept credit cards, store payment information or info securely, handle subscriptions, manage fraud, comply with financial regulations in 100 plus countries. They plug into Stripe's APIs, and Stripe handles all that mess. Think of Stripe as the operating system for online money. How Stripe makes money: the core revenue model is simple: transaction fees, typically approximately 2.9% plus 30 cent per successful card charge, varies by country and method. But that's just the base layer. On top of that, Stripe sells subscription and billing, subscriptions and billing, Stripe billing, payments across borders, FX markups, fraud prevention radar, invoicing, payment links, embedded finance, issuing cards, treasury accounts, tax calculation and compliance, Stripe tax. Each add-on increases revenue per customer, not just number of customers. Who Stripe customers are: Stripe started with developers and startups, but now serves indie hackers and SaaS startups, marketplaces, Uber, Airbnb, big tech companies, Amazon, Google, enterprise and global businesses, platforms that embed payments for others. Their secret sauce: developers love Stripe, so companies adopt it early and often never leave. Why Stripe is hard to compete with. Stripe's mode isn't just tech, it's regulatory complexity, licenses, compliance, banking regulations, global reach, dozens of countries, local payment methods, switching costs. Once payments plus billing plus fraud are integrated, leaving hurts. Scale advantage, better fraud models, better authorization rates. Every new customer makes Stripe smarter and stickier. Stripe's long-term bet: Stripe isn't trying to be, quote, just payments, end quote. Their ambition is closer to, quote, AWS for financial services, end quote. Anything involving money movement, compliance, or financial tooling for businesses, Stripe wants to power it invisibly in the background. The trade-offs: Stripe is extremely powerful, developer-friendly, global, but not the cheapest at scale, can feel opaque with disputes/holds. Support can be slow for smaller companies. Still, most companies decide the trade-off is worth it. Fascinating. On to Gemini. As of early 2026, Stripe has evolved from a simple, quote, 7 lines of code, end quote, payment processor into the fundamental architecture of the modern internet economy. With a private valuation currently sitting around $106 billion, it has become a, quote, fintech titan, end quote, that processes over $1.4 trillion in annual payment volume, roughly 1.3% of global GDP. Presuming that's, just let me double check, AUD. I think that could be USD. So we'll continue, presuming USD. In annual payment volume, roughly 1.3% of global GDP. The, quote, big three, quote, focus areas in 2026. Stripe's current strategy is dominated by 3 major pillars: agentic commerce, Stripe has moved beyond, quote, human-focused, end quote, checkouts. They recently released the agentic commerce protocol, co-developed with OpenAI, which allows AI agents to browse, negotiate, and execute payments autonomously. The crypto pivot, after acquiring the stablecoin platform Bridge for $1.1 billion in late 2025, again presuming USD, Stripe is launching Tempo, its own layer 1 blockchain, in 2026. This allows for near instant global settlements using stablecoins like USDC. Stripe managed payments following the acquisition of Lemon Squeezy. Stripe launched a, quote, merchant of record solution, or merchant of record, end quote, solution. This allows businesses to sell globally without worrying about international tax compliance or local entity laws. Stripe handles the liability. Category payments, core products, checkout, terminal, in-person, billing, subscriptions, link, one-click checkout, business operations, tax, automatic calculation, revenue recognition, Sigma, SQL, data analytics, financial services, capital, business loans based on sales, issuing, virtual/physical cards, treasury, startups, Atlas, business incorporation, identity, KYC/ID verification, current 2026 stats and rumors, IPO watch. Rumors are swirling about an H1 2026 listing, while the company has a long resisted going public, has long resisted going public. The, quote, mega IPO year, end quote, of 2026 has analysts predicting a public debut soon, which is very interesting and builds nicely on, we've discussed it on a number of different topics about episodes about going public. Just maybe one more time, a little bit of an overview. This year will be super interesting if it's a mega year for IPOs. I just looked it up. An initial public offering, IPO, or, quote, going public, end quote, is when a private company first sells shares to the public to raise capital. It transforms a company from a privately held to a publicly traded on a stock exchange. This allows investors to buy shares and provides the company funds for growth, expansion, or paying down debt. Key aspects of an IPO, quote, going public, end quote, the company moves from having a few private owners to having many public shareholders. Capital raising, the primary goal is to get money to grow the business. Listing, the shares are listed on an exchange like the NYSE, NASDAQ, or ASX. Process, company use investment banks to set the initial share price and manage the sale, often involving a prospectus document detailing company financials. Risk, while offering new investment opportunities, IPOs can be volatile and risky as they are new to the public market. An IPO is essentially a company's debut on the stock market, allowing the general public to own a piece of it. And mega year 2026 IPO. A 2026 is shaping up to be a, quote, mega, end quote, year for IPOs. This is in the AI overview on Google. Potentially the strongest since 2021, with US IPO proceeds forecast to reach a record $160 billion. Tech in Asia. High-profile tech, AI, and space companies including SpaceX, OpenAI, Anthropic, Databricks, and Stripe are expected to lead this surge. Key 2026 mega IPO candidates: SpaceX, considering a potential record setter, with reports indicating it has interviewed banks for a 2026 listing. OpenAI, the AI leader, is in the spotlight for a potential IPO with valuation estimates in the hundreds of billions. Anthropic, another major AI firm, expected to go public, potentially contributing to a, quote, super cycle, end quote, of IPOs. Databricks, with a valuation over $134 billion, this data/AI company is considered a high likelihood candidate for 2026. Stripe, a top fintech candidate, expected to be one of the year's most anticipated listings. Canva, the design platform, is viewed as a strong candidate following a high valuation in secondary sales. Monzo, positioned as a major fintech IPO for the London market. Market drivers and outlook. AI dominance. The AI boom is driving high valuations and investor demand, with companies like Burn Technology and Zipu AI already making moves. I think I got that correct. Forgive me if I'm wrong. Increased activity. Goldman Sachs expects the number of IPOs to double to roughly 120 tech in Asia. Economic factors, perhaps it's AUD, not USD. Economic factors, improved market conditions, higher equity prices, and easier financing are expected to fuel the rebound. Concerns. Analysts warn that a massive influx of new high valuation shares could create volatility and pressure to the broader market. Fascinating. Looks like it will be an interesting year. This is on Forbes. Could 2026 be the year of monster IPOs? SpaceX, OpenAI, and Anthropic jostled to join the $1 trillion club. Fascinating stuff, and maybe I'll link that article below if you get a chance. Global reach, now supported in over 50 countries and handling 135 plus currencies. Uptime maintains a legendary 99.999% uptime, processing over 578 million transactions during the last Black Friday/Cyber Monday period alone. Fun fact, over 87% of Fortune 500 companies now use at least one part of the Stripe ecosystem, though you might only see their quote link end quote button on or a custom branded checkout page. Fascinating. Nearly on the 15 minutes. Just a bit about Stripe in Australia. Stripe operates fully in Australia and is widely used by local businesses to accept online and in-person payments. Here is a clear overview of how Stripe works for Australian businesses. Stripe in Australia, key facts: local availability plus support. Stripe supports, this isn't an advertisement by the way, Stripe supports Australian businesses directly, letting companies accept payments, manage billing, and build commerce experiences without needing a separate international merchant account. Stripe also supports local payment methods that matter in Australia, including cards, Visa, MasterCard, and co-branded ETFPOs via Stripe's routing rules, digital wallets like Apple Pay, bank-based payment options, and direct debits. This means you can cater to Australian customers' preference while also serving overseas. Fees and pricing for Australian accounts, we won't get into that just now. I want to keep this under 15 minutes. Just something that we haven't mentioned, at point of sale, optional Stripe terminal hardware and tap and mobile quote tap to pay options, or tap to pay end quote options, let you take in-person payments, e.g. at market or retail counters, while still integrating with your Stripe account. There's a load of things here. I wish I could make it longer. Maybe we go longer than 50 minutes. Maybe we'll do another one. By the way, they do have Irish founders, so I don't want to seem like I'm biased in any way. I don't know them personally. One big thing to know about Stripe, it's incredibly easy to start with and surprisingly hard to leave. Stripe wins. This is the one big thing, by the way. It's incredibly about Stripe. It's incredibly easy to start with and surprisingly hard to leave. Stripe wins you over early with great docs, clean APIs, and fast setup. But over time, as you add subscriptions, webhooks, fraud rules, tax, invoicing, marketplaces, etc., Stripe quietly becomes deeply embedded in your business. Switching later can mean months of work and real risk. That's not a knock, it's actually Stripe's superpower. Just go in knowing amazing for speed, scale, and reliability. You're trading flexibility and price leveraging for convenience and stability. If you're building something meant to grow, Stripe is often the right lock-in. I think that's it. 15 minutes. Thanks for listening, folks. And if you'd like me to do a part 2, feel free to reach out. Thanks.